All right, today we're going to be talking about common signs that you may get denied for a mortgage loan. And that may be a purchase loan, it could be a refinance. But what are common signs that you might get denied? If you haven't tuned into my channel before, my name's Andrew Augustiniak of the Augustiniak Lending Team, and we're constantly just trying to bring questions that come up on our daily routine here in the office to this channel to provide a resource for you to answer common questions. Now, with this video, or common reasons why you might be denied is because you don't want to assume though that you will automatically be denied, because when it comes to financing, no matter where you are, whether you think you're approved, whether you think you will get approved, whether you won't get approved, you want to talk to a lender, preferably us, to set that baseline of where you're at. Because the worst mistake that somebody can do is never even try, because they assume the worst, and then 5 years goes by and they never do anything. Whether you're denied or not, if you can establish a baseline for where you're at, you'll know where to go. You'll know what to do, what to fix. And that's what we do. We tell people, hey, you don't qualify for this reason. Work on this over the next 6 months so you can qualify. Just like going to the gym, just like getting healthy, just like improving yourself, right? You have to have a starting point. So now let's talk about the common reasons why you might get denied. Number one, credit history issue. You have a history of missing some bills, you missed some credit card payments that took down your credit score. You might have some collections on there, from when you were 21 or anything like that haven't fallen off yet. You might just have a lot of debt that you just need to work on getting erased. So one common issue is credit history, negative hits that have been on your credit for a while. And it's good to know, because sometimes people have those on their credit and they don't even know about it. Medical collections, that's the number one thing that people have on their credit that they have no clue about because insurance didn't cover it or whatnot. So it's good to have a lender like us take a look at your situation and tell you exactly, okay, credit history wise, what's going on, right? So credit history, number one. Number two, debt to income ratio issues. And what I mean by that is, like, we look at your gross monthly income, we look at your gross monthly debts, your payments, right? Your minimum credit card payment, your car payment, your student loan payments. And we see, hey, how much money do they make versus how much debt do they have on a monthly basis? And is there room for a mortgage payment? That's how we qualify. We don't say like, hey, you're qualified for up to $500,000 based on how much debt balances you have. We say how much of a house payment can fit in there. The less monthly debts you have, the more house payment you can fit in there. So that's another common reason why people don't qualify. And then we look at your income, right? Your tax returns, and we say, okay, if you're self-employed, are you writing off a lot? A common strategy that self-employed borrowers have is they bring in money, but then you have expenses, you have write-offs, you have things, and you're trying to limit the amount of taxes you pay. But keep in mind that hurts you on the loan qualification for a traditional loan. There are bank statement loans and loans aimed at self-employed individuals, but generally the income situation for self-employed borrowers can be a tricky one to navigate, and that is why you should communicate with a lender like us who know how to navigate those situations. But overall, don't be discouraged. Don't be discouraged by these parameters. Know what they are, talk to the lender, establish a baseline, because two things are going to happen. If you're motivated to want to buy a home, you talk to us, we're either going to tell you A, you're qualified, or B, you're not. And if you're not, then let's establish a plan to have you get to a point where you can qualify in the future, 6, 12, or 18 months down the road. Then whatever that plan is, best advice I can give you is just do the plan, right? Out of 10 borrowers, let's say 10 borrowers don't qualify and we give 10 of them a plan, 3 of them will actually accomplish that plan. So don't be one of those other 7 that don't accomplish the plan. Figure out what you need to do the things you need to do, so then 12 and 18 months down the road, you can buy a house. Or we're just gonna tell you you're qualified right from the start and you're good to go. Those are the common things that people get denied for. If you guys have any questions, reach out. You can email me directly. You will get me, you'll not get somebody else, and we will talk to you on our next video.